Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as type of order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
Good afternoon, ladies and gentlemen. Glad that you can join us this afternoon as we speak to the management team of Wenceslao and Associates to update us on their full year 2022 business results. Prior to this discussion, Jeff Lucero, the Investor Relations Officer of DMW, will be hosting a virtual tour of Parqal. It's their 8-hectare mixed-use development in Aseana City. This is the first time that we will be doing a virtual tour, and hopefully you can enjoy this tour and understand more about the business operations of DM Wenceslao. But prior to this, I would like to invite to the floor the the director and the chief executive officer of DM Wenceslao and Associates, Bud Wenceslao. Bud, good afternoon.
Hi, good
Bud?
afternoon.
Okay, Bud.
Thanks for the introduction, Jeff.
Of course, of course. Thank you for doing this call with us, and of course for showing to us, of course, later on your Parqal, your mixed use development in Aseana City.
You're welcome, Jeff. And again, good afternoon, everyone. I'd like to express my gratitude to you and to AB Capital Securities for inviting the DMW management to sharing our story and basically discussing the results of our 2022. And also, I'd like to congratulate AB Capital on the recent good news that I saw in the news regarding G stocks.
Oh,
As you know, financial inclusion, inclusivity is very important in our market, and we applaud these kinds of efforts.
thank you very much for that, Buzz. In fact, I'm hoping that some of our early Gcash users, Gstocks PH registrants, as well as our team from Gcash will be able to join us for this call. So hopefully they'll be able to join us a little bit later on. But I know, Buds, that you have a message for everyone. So please take it away.
So again, thanks to the entire EB Capital team for inviting us, and to helping to spread the DMW story and to share the results of our 2022 operations. It was a tireless effort from the entire team. And with that, I'd like to leave off to Jeff to start the presentation.
All right. Thanks,
Thanks,
Buds.
Bud.
Hi, Jep.
Hey, Jeff.
How are you?
This is
I'll
it,
ride on Buds
finally.
now. Congratulations again. Gcash stocks, huge milestone for you guys. And yeah, we fully support you in this.
Thank you very much for that. Thank you very much for mentioning that one. But definitely, this is we would like to kick off our
Yeah.
investor education, of course, with you touring us in Parqal.
Yeah.
Jeff, Jeff, we've been in the industry for quite a while now. Let's not just mention any numbers.
Yeah.
But for this new breed of investors as well as for our existing base, it's this is a very good initiative. It's a good thing that
Yeah.
you're willing to do this with us.
Yeah.
Because we both feel that understanding a company goes beyond the numbers.
Yeah. Yeah. So
So
fully agree with you on that, Shepna. So in my presentation, the
mhm,
mini tour of Parqal and mini overview of Aseana City is included. So later on, as I go through the slides, I think the AB Capital team will be flashing the videos, of tours in Parqal and in Aseana City. So very
okay.
exciting. But let me start. Thank you again, for allowing us to do this
Of
with you
course.
guys. So let me start with the company background. Next slide, please. Okay. So this is the snapshot of DM Wenceslao. We've been in business for 58 years. We are one of few quadruple A PCAB license holders. We have 77 hectares land bank, 56 of which are inside our crown jewel, Aseana City. We have over 160,000 square meters in commercial building space, and we've leased out over 166,000 square meters of land, as well as 60,000 square meters of residential gross floor area. We are a member of the PSE Property Index, and we have a market capitalization of 23 billion pesos. Our book value is at 26 billion, which means that we're trading below book. And we have a net asset value of 230 billion pesos, which means that we are trading at a 90% discount to NAV, despite continuously growing earnings, already higher than pre-pandemic, a strong balance sheet, and rising dividends. So later on, Jep, I'll discuss this concept of net asset value further, for the appreciation of your viewers. So next slide, please. This slide was what I was discussing earlier. Slide, please. Okay, so these are currently our business segments, and the drivers
Mm,
of our earnings are items 3 to 5. So in terms of land leasing, we have quality long-term tenants. So we have the largest Ayala Mall in the country leasing land from us. So Ayala Mall Manila Bay is leasing land from us. Another
mm,
key tenant here is St. Luke's Medical Center, and major warehouse shopping chains. No. In
mm,
terms of residential projects, we're currently pre-selling our second residential project, Mid Park Towers. It's already 75% pre-sold for the launched units. On commercial leasing, this is where things get exciting because we're
mm,
currently at 162,000 square meters, but the opening of our flagship project, Parqal, will add over 70,000 square meters to that. So by the end of the year, we'll have 230,000 square meters already. So
mhm,
next slide, please. So just a brief background, we started in 1965 as a contractor for multiple government projects, and it was in the early 90s when we took on an over 200-hectare reclamation project along Manila Bay area. And for this, we were awarded a parcel of land, which we're now developing into Aseana City. Then
mhm,
that parcel of land, the other half, no, the other half parcel of land that went to the government, they developed to become the entertainment city, so just beside us.
mhm,
From there, we evolved into an integrated property company. We have land leases, land sales, mixed use buildings, office buildings, residential developments. No, then the most
mhm,
recent milestones here include the completion of our largest office development, 8912 Asean Ave. 58 Jupiter was also completed in Makati, as well as the signing of key land lease tenants, including St. Luke's Medical Center, Aseana City. So next
mhm,
slide, please. So this is Aseana City through the years. So I think from this top level point of view, you'll be able to see the rapid rise of developments in Aseana City,
right.
from way back when to where we are now,
That's right.
in 2020. So the next video, next slide, please. Yeah.
Mm.
So
So Jeff, hang on. How long did
yeah,
it
go
take
ahead.
for DMW to reclaim that entire
Yeah.
area there in Manila Bay?
So we reclaimed it late 80s. We started to reclaim it early 90s all the way to early 2000s. No, by the early
Mm,
2000s, all reclamations here were already completed. No, and we've
yeah,
already have our land leases, key tenants like SNR. No, um,
yeah.
sorry. Can we just go back to to this video? Yeah, there you go.
Mm,
So Here naman, kanina top level view, this is a closer look for Aseana City, no? So that's
Mm.
the reclamation right after it was reclaimed, no? And
Mm,
even
that's right.
from December of 2015, you can see a lot of empty lots pa, no, along Macapagal, which is
Mhm.
very different from 2019, 2018, no? And even in
Right.
2020, no? So you can
Mm,
see na even in 2020, peak pandemic years, all through 2022, ang dami pa ring progress here in Aseana City, no?
that's
So,
great.
yeah. Next
And
slide,
then
please. Yeah, go ahead.
it's very good that we're having this discussion because
Mhm.
I went to the Manila Bay area, so I
Yeah,
attended an event there in Sofitel, and I
yeah, yeah.
noticed that the reclamation project. I just
Mhm.
can't remember whose project it was because I know that
Yeah,
it's owned by a
sure.
lot of developers. But
Mhm.
so it's very timely, although this would be reflective more of the industry now, especially in the of how developers are reclaiming land. But
Yeah.
I don't know if you will be able to share with us the cost of the reclamation and the price per square meter of the reclaimed land, but I believe currently it's about 10,000 pesos per square
Well,
meter.
if you look at their, I don't know, if you look at their balance sheet, the cost of land, our land assets is at around 30 plus thousand peso per square meter. No, so what
Mhm.
it reflects is the cost that we incurred for the reclamation that we had. No, so it's around
Mhm.
30 plus thousand per square meter. But take note that when we reclaimed land, it's near land. No, so mababaw pa yung lupa. I
Mhm.
think around less than 20 meters deep lang. But when you do reclamations further beyond the bay, it becomes deeper and obviously it becomes more expensive. No?
Right.
So, yeah. Mm-mm.
Understood. Jeff, before we leave this topic,
Yeah.
I believe that you've amassed at least 100,000, 200,000 hectares of land. That is part of it is of course being developed. I believe it's 100, if I'm not mistaken. Is that correct? 100 hectares of land there in Aseana City.
So Aseana City is a total of 107 hectares. And so just going back to the history, we reclaimed the whole land where Aseana sits and Entertainment City sits. No,
Mhm.
Entertainment City sits. So that's a total of 200 plus hectares. And then as compensation for reclamation works, we were awarded the 107 hectares, which we're now developing into Aseana City. And then the
Mhm.
rest went to the government. So that's the Entertainment City.
I see. Are you
Yeah.
still reclaiming any portion of Manila Bay? Are you part of this reclamation project that is ongoing?
The ongoing reclamation projects, hindi kami ano doon,
I
included.
see. Okay.
So,
All right.
yeah. So, yeah, this is Asiana City now.
Mhm.
As you can see, no, it already took shape from where it was even as recent as 2015. No? So, we're glass half full,
Mhm.
where a number of our key developments are already in place, yet we've only just begun.
Mhm.
So, next slide, please. All right. So
Mhm.
moving on to key investment highlights. The first one is our land bank that is well positioned for future growth. Okay.
Mhm.
So this is our total land holdings in Asiana City as of December 2022. No? So we have a total of 56 hectares. As you can see here, less than half have already been used or allocated for pipeline projects. The 28.7 hectares, which is more than half of total, remain as land reserves. No? So this allows us decades worth of developable land and runway for future growth. No? So yeah, next slide, please. So, as you know, Aseana City is DM Wenceslao's crown jewel. And
Mhm.
in real estate, our CEO always shares that there are three major rules, which is location, location, and location.
Mhm.
And our location here in Asiana is as prime as can be. We are nestled between Entertainment City and the SM Group's Mall of Asia complex. No, and
Right.
here inside Asiana City, we're already host to the largest Ayala Mall in the country, Ayala Mall Manila Bay. We have our very own 5 hectare Parqal, which is our flagship project, and soon
Mhm.
enough, St. Luke's Medical Center, Asiana City. No? In terms of transport infrastructure, you have the NAIA Expressway, keeping us just 5 to 10 minutes away from the country's main gateway. The Parañaque Integrated Terminal Exchange, which is less than 2 kilometers away from Asiana. And there are multiple transport terminals within the vicinity, including, next slide, please. Okay, the LRT1 Cavite extension, which will be
Mhm.
operational next year. So as you know, we are a key beneficiary of this big infra project. Next slide, please.
Mhm.
Uh, as there will be a dedicated station for Aseana City. So this is where the station will rise. This is near SNR Aseana City. So
Mhm.
this is a bit outdated. I think I
Mhm.
have another picture of the current progress. There you go. So that's how it looks currently. No? So I think it's more than 50% complete, the Asiana City Station. No? Once fully operational, this will cut the travel time between Baclaran and areas in the south of Metro Manila. And
Mhm.
personally, I'm looking forward to this because I live in Bacoor, Cavite. No? So yeah, this is something that I can take going to work. No?
Mhm.
Yeah. Next slide, please.
And then Jeff, sorry, I just noticed that there's a plot of land there that is still vacant.
Mhm.
Is that land already promised for a specific development? I understand that's still yours, right?
So yeah, it's near SNR. There's we still have plots of land there. And yes, it's part of the master plan for Asiana City, but
Mm.
it's not yet in the immediate next 3 to 5 years pipeline. So later on,
But
I'll share with you the medium term
mm,
pipeline namin after Parqal. So
okay.
yeah, next slide, please. So our modern jeepneys now offer an Asiana City loop, to further improve transport within the estate and to bring in foot traffic from the dense areas like the Mall of Asia complex and the Parañaque Integrated Terminal Exchange. No. So once the LRT station opens, it will be very likely that it will also be included in this loop. So currently we're doing libreng sakay or free
Mm.
rides from PTEX um, to Aseana City and MOA to Aseana City. I think that will last until May. So yeah, but moving forward, that will help bring in foot traffic here into Aseana City.
Mhm.
So yeah, next slide, please. Our next investment highlight is being an integrated master developer committed to holistic estate development. Next slide, please. So, Jeff, we cover the entire value chain, starting
Mhm.
from land reclamation and acquisition all the way to value extraction activities, including construction, residential sales, land leasing, commercial building leasing. And these value extraction activities allow us capital to recycle for future growth. Next
Mhm.
slide, please. Okay. So we develop Asiana holistically with mixed-use assets that attract a balanced locator mix, making sure that each tenant accrues value to Asiana City. So we make sure that the entire CBD is sustainable, walkable, transit-oriented, and safe. And all these being done mean that the whole of Asiana is greater than the sum of its parts. Next
Mhm.
slide, please. So just to provide a perspective to our listeners, no, this is the master plan for Asiana City. You were asking kanina, Jeff, no?
Yeah.
So orange and red are the mixed uses.
Mhm.
You have the offices, you have the F&B and retail for that side, no? And then yellow is for residential. So as you can see here,
Mhm.
number eight, the yellow block there is for mid-part towers. And it's surrounded by draws like the largest Ayala Mall in the country, Ayala Mall Manila Bay.
Mhm.
Beside it is the 5 hectare mixed use greenway, our very own Parkal. Then City of Dreams is also nearby. No? So letter O, the blue lot there is St. Luke's Medical, is where St. Luke's Medical Center will rise. No? So as you
Mhm.
can see, Asiana City's master plan so that each development would accrue value to the development beside it and to the whole estate in general. All right, next slide, please. So our next key investment highlight is that we are currently in a hyper growth phase. Next slide, please. So the completion of Parkal this year will boost our commercial leasing space by over 70,000 square meters to a total of
Mhm.
242,499. That's almost thrice as much than what we had less than 3 years ago or in
Mhm.
2020. You know. So the opening of Parkal will also increase the retail and F&B percentage to total commercial portfolio. Next
Mhm.
slide, please.
Jeff, I don't know if this will preempt some of the discussions later, but currently Parkal is how many percent leased out already?
So it's pre-leased the commercial, the F&B and retail side of Parkal is more than 50% pre-leased already.
Mhm.
So
Which is about
we're
80%, correct? No? 80% of leasable area.
bulk of Parkal is F&B and retail, no, and then there are some parts of Parkal, the third and fourth floors of the buildings, which is for office tenants.
Okay.
So yeah, so as of December 2022, Parkal is already 89% completed and it's set to open this year. We're looking at around mid of this year, so around July or
Mhm.
August of this year. No? So with that, allow me to walk you through virtually, so you can appreciate the beauty on the
Yeah,
ground.
yeah. That's what we promised.
Yeah. So Parkal is actually a wordplay from park and calle, no?
Mhm.
Here in the middle of
Mm.
Parkal is a linear park of greeneries, and the canopy that you see there, that's an ETFE canopy which blocks the heat, and allows visitors to enjoy Parkal even at high noon or even when it's raining, no. So
Mm.
Parkal is expected to be among the top tourist hubs in the metro. It's very accessible to public transportation with ASEAN City Loop. And you can bike your way to Parkal. Below that massive 5-hectare development, we have abundant bike racks and even showers for those na gustong magbike going to Parkal, to freshen up. There's also over 1,000, parking slots below Parkal for those bringing their cars. And we're a
Mhm.
walkable estate, so you can also walk going to Parkal. No? So,
Mm.
yeah,
Yeah, maybe we can show it again, Jeff. Medyo
sige.
mabilis lang yung video so that we can fully appreciate it.
There you go. That's five
You know, from
hectares of land. Mm-mm.
from this perspective, this looks a lot like, of course, the commercial area here in BGC, which is of course High Street.
Yeah, but we have the ETFE canopy to make it
Mhm.
enjoyable even at high noon, no, and even when it's raining.
Right.
So yeah,
So this is also what you were saying, wherein yung basement ng Parkal would cater to the F&B locators,
so
tenants.
it's a total of 9 independent buildings.
Mhm.
There are 4 stories each building, and then the first 2 floors, so the ground floor and then the second floor, would cater to F&B tenants and then retail tenants. No? So some of the um, key tenants that we have here, we have the marketplace, for
Mhm.
your upscale grocery needs, a couple of high profile na retail shops, and then we have, I think, the largest, if not one of the largest, Mary Grace here
Mm.
in the Philippines, no. Then there's Starbucks, the usual, the
Yeah.
cake shops, no. So yeah, for the retail and F&B component, the take up has been quite good. So
Mhm.
we're a couple of months away from opening it, and it's already 50 to 60% pre-leased, no, the F&B and retail component. So
Mhm.
yeah,
Jeff, one more thing.
yeah.
For your tenants, of course, when are they looking to open their doors? As early as June?
No, sabay sa grand opening, no, mostly.
Oh,
So,
okay.
because, well, we have the anchor tenants, I mentioned the
Yep.
marketplace, and it makes sense na the grand opening ng Parkal would be kasabay nung opening ng mga tenants that would
Tenants,
attract
yeah.
foot traffic to Parkal. No? So yeah,
Mm-mm.
it's somewhere in July or August.
Yep. And then something, of course, that is not on paper or an information that you cannot find anywhere else is, how's the interest naman from locators? What kind of inquiries have you been getting, especially as you've mentioned, no? LRT will be opening a new
Yeah.
station there by next year.
Yeah, no, as I mentioned, it's been strong. No, the take up from retail and F&B has been strong.
Mm.
Parka will also be 5-star Verde certified, and there are a lot of, like, mostly for the international retail brands who are very keen on sustainability. So
Mhm.
that's something that attracts them as well. No, so I'm not sure if I can disclose already, but we have a major na clothing retail shop siya who's nearing finalization. of signing in Parqal, and one of the aspects that they looked at is yung sustainability aspect, no. And
Mhm.
given that Parqal is 5-star Verde certified, and even the parent company itself, DM Wenceslao, is
Mhm.
doing a lot on sustainability, no.
Right.
So yeah, but I'm sure you'll be able to identify them. They usually charge you, I think, 1 peso or 2 pesos, if you don't bring your own bag, because that will be additional waste. No, so
Yeah,
yeah,
I see. Okay. And then, we're coming from the pandemic, and I know that this year, especially for the mall
all
operators and
right.
commercial,
Can
uh
we go to the next slide, please? Okay, there you
hello,
go.
Jeff. Am I still there?
Yes, yes. So uh, I think this is a video for Mid Park Towers, the construction. Okay. In any case, Mid Park Towers is already over 52% complete. As of December 2022, we've already
Mhm.
topped off all towers last year. And as early as the fourth quarter of this year, we'll already start turning over some units. No,
Mhm.
so this is already our second residential project, and it's right beside Parkal, so it's very attractive. So
Mhm.
yeah, next
Mm.
slide, please. If the video will not play.
Yeah.
Okay.
Jeff, sige, while we're waiting for the video to play, I wanted to ask also kanina, how are the rental rates looking like, especially for your new tenants, for the new leases that you've signed recently, as
Mhm.
well as of course there is a non-disclosure agreement, but siguro
Yeah,
a rough estimate of the rental rates that you are able to charge, especially given the current
yeah.
situation.
No, actually, for the retail and F&B component or the shops, it still goes way beyond 1,000 pesos, 1,200 peso per square. No, for the office component, this is where there's a bit of rental reversion, somewhere around 10 to 15% from what we've
Mm.
had prior. So now we're looking at around 700 to 750 peso per square for the offices. So anyway, sorry, the video of Mid Park was playing. So there, no, the four towers have already been topped off, and we will already start turning over some units as early as the fourth quarter this year.
Mm.
All right. Okay. I guess we can go to the next slide for that. Yeah.
It's lagging a little bit, I guess, because of the video.
Yeah, that's fine. That's fine.
Mm.
We can go to the next slide. So, yeah, beyond our immediate pipeline, which I discussed, no, we have close to around 200,000 square meters of commercial leasing space in the medium
Mhm.
term pipeline, so 3 to 5 years, as well as over 30,000 square meters of saleable floor area. Once our third residential development, which is One Park Suites, is launched. No?
Mhm.
So, next slide, please. Okay, so the operational growth that I discussed earlier on is well reflected into our earnings. As
Mhm.
earnings continued to grow, notwithstanding the pandemic and macroeconomic headwinds, we are one of very few property companies whose earnings already exceed pre-pandemic level. And with our growing earnings and comfortable balance sheet, we were able to grow our cash dividend by 23% to 0.07 peso per share. And this is our fifth consecutive year of dividend payout since we went
Mhm.
public, and our highest dividend so far. No? Next slide, please. So, the quick growth that I discussed was achieved through prudent financial management. So, our financial strength allows for the ability to sustain this growth. Next slide, please. As you can see, we have debt to equity ratio of only 12% or 0.12 times. This is one of the lowest, if not the lowest in the industry. And we're still
Mhm.
achieving an ROE of around 9%, which is in the higher side compared to our property peers. So next
Mhm.
slide, please. A couple of years back, as you know, Jeff, I was doing research for sell side. No?
Yeah, yeah.
We're on the same side of the table, no. And when I see, profitability ratios like 9%, I say, okay, that's good,
Mm,
on the high side of among property companies. The next question is, well, how's the quality of profitability?
that's
And a
great.
good way to figure this out is through the DuPont model, which basically breaks down your ROE into the net income
Mhm,
margin, asset turnover ratio, and equity multiplier. The equity multiplier basically talks about how much leverage a company has. No? And when you
mm,
start seeing, equity multipliers of over five or five times and more, I tend to be more worried of the quality of profitability because in
mm,
unfavorable market conditions, in a high interest rate environment, like where we are now,
yep,
debt debt-driven profitability quickly erodes. So
mhm,
for DM Wenceslao, we have a very low equity multiplier of 1.5 times given our low debt, and the clear
mm,
driver for ROE is our industry leading net income margin, 50%.
mm,
So we
mm,
achieve this through reasons that are inherent to our business. Number one, the higher margin leasing business accounts for majority of our earnings. And number two, we
mm,
have low cost of land since we acquired it decades back through our reclamation project. Next slide, please.
mm,
So our financial strength supports growth aspirations. Um, I always say this, no, but at a time when the textbook definition of black swan events, we should probably consider changing it to something that occurs every year or every other year.
mm,
No, it's easy to appreciate growth that is achieved hand in hand with prudent financial management, as this kind of growth can be sustained even amidst the toughest of times. So for DM Wenceslao, we achieved a significant growth while having a very low leverage. And as a matter of fact, we are at a net cash position of 2.4 billion. We are also well
mm,
supported by leading banks with over 10 billion of unutilized credit lines. Next slide, please. Okay, next slide, please. Finally, despite all these investment draws, we remain grossly undervalued. So allow me to explain this. I promised to explain this earlier. No,
yep,
I mentioned that our book value is at 26 billion pesos. The
mm,
26 billion peso book value is at book or at cost. No, so the value reflected in book value of our land assets is the cost we incurred from our reclamation decades ago. So since the value is several decades ago, this is obviously not reflective of the current values here in Aseana right now.
mhm,
So this is where Colliers came in to get the updated valuation of our assets. They looked at recent land sales in the area, the amount of
mhm,
income that can be generated from our assets, and they arrived at a valuation of 227 billion pesos. Uh,
mhm,
if you add our net cash position to that, and we have around 2.4 billion, and their assets outside of Asiana, the resulting net asset value is 230 billion pesos. So that 230 billion pesos is sort of the updated market value of our assets, the land, the buildings, etc. Then yung market capitalization is of course determined by the share price of DM Wenceslao. So
mhm,
our current stock price or market capitalization is at 23 billion, meaning that 23 billion relative to the 230 billion net asset value, we're trading at a 90% discount to NAV. So
mhm,
yeah, next slide, please. Okay, next slide, please. So just to highlight the transactions that we've had in 2022, we closed a land sale at
mhm,
440,000 pesos per square. No? So next slide, please. That 440,000 peso per square is 3.5 times than our land sale in 2015, which was only at 125,000 peso per square. And it's even higher than what we had pre-pandemic or in 2019 at 425,000 peso per square.
mhm,
So next slide, please. Another key transaction that we had in 2022 is, of course, the signing of St. Luke's for 1.4 hectares. That's a total of 50 years. And the lease commenced in the third quarter of 2022. Next slide, please.
mhm,
Okay, next slide, please. So our core net income is up 13% year on year in 2022. Core net income basically just strips out the one-off tax gains related to Create Law in 2021. And the driver of growth was the
Mm.
residential revenues. No? As you can see, it more than doubled to 1.25 billion, and it was supported by 9% growth in rental revenues. Majority or
Mm.
52% of our revenues is still driven by rental income or recurring income. Okay, next slide, please.
50%.
So taking a closer look at that 2.2 billion leasing revenues, you can see that land leasing is still the largest. It contributed 1 billion pesos, no. And land leasing is our most stable business segment. The lease terms here are
Mhm.
45 years, 50 years, no. So it's very stable. Um, Meanwhile, the average lease expiry for commercial buildings remained high at 5.4 years. So next slide, please.
Mhm.
Residential revenues, as mentioned, more than doubled year on year due to the higher number of units qualified for revenue recognition and continued construction progress. I'd like to point out that our residential gross margin at 57% is among the highest in the industry. No? So over
Mhm.
75% of the launched mid-park units are already pre-sold with average collection of 36%. No? So this average collection rate is already high. Typically, the higher this percentage is, the less likely that you'll have cancellations. No? So just take an example. For instance, you bought a condominium for 10 million pesos and you already paid
Right.
36% total or 3.6 million. So it's less likely na you cancel na because sayang naman, di ba? The 3.6 million.
That's correct.
So
Yeah.
next slide, please.
Jeff,
Yeah,
question also. Can you give us a profile of your buyers, of your residential buyers?
yeah. So in terms of our buyers, there are usually two kinds of buyers in the market. No, there are the end users and
Mhm.
the investors. No, so currently, what's driving the demand for us are the investors or the bulk buyers. It accounts for more than half of our total sales. No, um,
Mm.
we also have foreign buyers, which is close to 40% of total.
Mm.
All right. Okay, next slide, please. So, in general, our margins are among the highest in the industry. Gross profit margin, 77%. Operating profit margin,
Mhm.
65%. Net income margin at 50%. No? So, I already mentioned the key reasons to this earlier. Number one is our low cost of land, which we acquired through our reclamation project. And number two, the substantial
Mm.
share of the higher margin leasing business to our total earnings, which is more than half. So next slide,
Mm.
please. So for 2023, we expect the opening of Parqal to boost rental revenues. The first full year booking of revenues from St. Luke's Medical Center will also buoy earnings, and the increase in take-up of newly opened commercial buildings will also increase rental revenues. No? On the residential side, the
Mhm.
sustained construction progress of mid-park towers and the continuous increase in the number of accounts qualified for revenue recognition will drive earnings growth. So next slide, please. Next slide, please. All right. So we took the S&P Corporate Sustainability Assessment and we got an 88 percentile rank. No? This basically puts us at the top 12% of real estate companies assessed by S&P globally in terms of sustainability
Mm.
performance. So I'm very proud that all our sustainability efforts are now getting recognized. I'd like to
Mm.
share also that in January 2023, we've been included in a Philippine-based ESG fund. So DM
Mhm.
Wenceslao is one of that. So, all right, next slide, please.
Jeff, for a property company, how big is a high ESG score to not only to your stock, no, but in your ability to attract tenants
Yeah,
who are looking for an ESG accredited or
yeah.
ESG building?
Yeah. So sorry, am I still here? Can you
Yeah,
guys
I
still
can hear
hear
you,
me?
although medyo choppy siya.
All right. Just stop me if if I'm laggy because it
Yep.
sort of blacked out. But there are a lot of property company. There are a lot of tenants who look for landlords with the same thinking as them, no, or with the same ESG oriented goals as them. No? So I mentioned this high profile clothes retailer. Who you
Mm.
probably know charges you, I think, 2 pesos if you don't bring
Mhm.
your own bag when you shop with them. One of the things that they looked at is, is this company aligned with our own sustainability goals? No? So in terms of attracting similar like-minded tenants,
Mm.
it definitely helps. No? So Parqal is of course 5-star Verde certified, which just means that we consume less energy, less water, and we, compared to buildings that are not, Verde or LEED certified. So yeah,
Are you
and
able
for
to charge,
charge a premium
yeah, charge a higher rent?
in a way, because if demand is there for like-minded landlords with ESG
Mhm.
aspirations, then if the demand is there, then definitely we will be able to charge a premium
Mm.
moving forward. No? But yeah, from a stock perspective, there are a lot of things that helps with ESG. Of course, being included in ESG funds helps passively boost your liquidity.
Mm.
There are also several indices globally, like the Dow Jones Sustainability Index, which we're aiming for,
Mhm.
the FTSE for Good Index, which we're also aiming for moving forward. Being included in those indices, which are tracked by trillions of dollars of assets under management, will help boost the stock's liquidity as well. So,
Mhm.
yeah. Next slide, please. All right. So we celebrated big wins in the Property Guru, Philippine Property Awards by Property Guru. Next slide, please. So ASEAN Residential Holdings bagged the best completed condo for Pixel Residences. And for
Mhm.
8912, we bagged the highly commended award for Best Office Architectural Design. So, yeah, next slide, please. I think this ends the. Does this end? Yes,
I
yes,
think
this
we
should
need
end.
that.
So they should move now towards the Q&A. So with that, Jep, I'll leave it to you to
Yep.
ask questions. I'll be the one directing, no, our senior management, our CEO, CFO, and our vice president for Corplan will be joining me for the Q&A. So I'll be
Yeah.
directing your questions to them. So, yeah.
Okay. Jeff, thank you very much for the comprehensive overview of the virtual tour. Of course, that's very much appreciated, as well as sharing with us a performance of DMW during the full year of 2022. And of course, a little peek into how DMW will be performing into 2023 and of course beyond as LRT's new station opens as well as Parkal opens during the second half of this year. Now, Jeff, we have a few questions from our audience, and the first one is from China Barachina. Are you looking to make any other big land sales similar to the one you made in 2022?
Probably Buds, if you could answer that.
Hi. So we do have a planned land sale. Usually, the properties we sell are usually the non-core assets. As you know, we keep most of the primer land bank for our own developments.
Mhm. But I just noticed, by the way, this is just a follow-up question, Buds,
Yeah.
but I just noticed that you sold the same amount of land for 2021 and 2022. That's about 787 million pesos. Is this something that was just a happenstance, and or is this really the target for DMW every given year?
It just so happened, I think it was a revenue recognition timing for that particular deal,
Mm.
because we had a singular buyer who bought two assets, but in terms of financing their purchase, it happened in roughly about 3 or 4 months apart. But they
Mm.
bought the same size
Mm.
in the same block.
I see. I see. So it's just one buyer. And okay. The next question is how much of your total revenues come from leasing? I think si Jeff touched on this already earlier.
Yeah, it's 52%, yeah, as of
50%.
2022. Yeah.
And then Jeff, just to I guess to shed more light on the impact of Parqal, especially for 2023, with the increase in gross leasable area by about 70,000, how much would this impact your leasing revenues for 2023?
Probably Sir Ben, if yeah.
It will be dependent on the contracts that we have with our tenants, but definitely with the increase in the number of tenants that will be added up to our total revenues um, will also follow suit, will also increase.
I see. Thank you. The next question is from uh huh, this is from Jaime Zalamea. What's your outlook on interest rates and how do you navigate this high interest rate environment?
Jaime, I'll be the one to take that. So, we take you from the major banks' outlook, which currently range from 6.5%, I think, to 6.75% for the end of 2023. I also read in the news now that the BSP already stated that it's possible to pause rate hikes in their May meeting. No, on the second part of the question on navigating high interest rate environment, I just like to point out that from a financial perspective, our balance sheet is actually best positioned to benefit from a high interest rate environment. No? So I was talking
Mm.
recently to a fund manager who's looking at us, and his investment thesis was to look for companies with high cash positions during a high interest rate environment. So our cash of 5.6 billion pesos accounts for 14% of our total assets. This cash to asset percentage ratio is the highest in the industry. We also
Mm.
have the lowest debt ratios, as I discussed earlier, which means that in this high interest rate environment, we benefit from high interest income, and that more than offsets the higher interest cost. No? So that's from the financial side, from the financial perspective. But from the operational perspective, the impact of higher interest rates has always been more pronounced on the residential segment. No? I
Mm.
touched on this earlier. There are two types of condo buyers. You have the end users, or the people who buy the unit because they need to live in it. So the purchase here is driven by the need, and there are the residential investors, no, whose driver for purchase is their expected returns for the investment. So far this year, we've seen a recovery in demand, particularly from the investor segment. And it does make sense because if you look at it, our current rental yield here in Aseana City is around 6%, given the current prices.
Mm.
It's just at par with, say, the 10-year treasury. But still, residential investments remain attractive since the primary driver of total returns in residential investment is the price appreciation. No? So, just to give
Mm.
you a history from 2016 to 2022, the price per square meter here in Aseana City has risen at a compounded annual growth rate of 18%. So, if you add that with the 6% rental yield, you still get more than 20%, which is very attractive still. So
Mm.
yeah,
Thank you very much for that comprehensive answer, Jeff. Now, for some of our audience who are joining us now, we are speaking to DM Wenceslao and Associates. We are privileged, of course, to have here their CEO, their Director and Chief Executive Officer. That's Buds Wenceslao. He's there at the lower bottom of the screen, and of course, we have their Vice President for Corporate Planning, Julius Guevara, is there at the upper right-hand portion of the screen. And at the lower right-hand portion, that's Mr. Benigno Tatunay. That's their Chief Finance Officer, or si Ben. And of course, the gentleman in the middle is Jeff Lucero, their
Jeff,
Investor Relations
I
Officer.
think it lagged a bit. Uh,
No,
so was there a question that was provided by some of the audience?
No,
No?
I just
Ah,
introduced
yeah,
everybody
you
on
did.
the
Okay,
screen.
sorry, sorry.
Yeah.
All right.
But
Okay,
anyway, we can proceed with our questions.
okay.
Can you see the next question, please? So this is a question from Marga Villar. Hi, are there any other areas outside the Bay Area in which you're looking to develop future projects?
This
I'll
one's
take that.
probably for Buds or
Yeah.
Sir
So
Julius if you want to chime in. Yeah.
sure. So absolutely, we are looking at projects outside of the Manila Bay Area. Actually, if you remember in 2021 during the height of the pandemic, we actually did an opportunistic sale in the heart of Makati, in Legazpi Village, which we're planning to redevelop into a 20 floor condominium project. We also recently finished our 5-story building in Jupiter Street, which is actually already 80% leased out. So these are the type of assets we're looking at, in prime locations. That's gonna further add to the primeness of our portfolio in terms of the location. Julius, do you want to add anything?
Yeah, well, apart from that, we're also looking for opportunities to do horizontal developments outside of Metro Manila in the fringe provinces. So we're constantly looking for opportunities.
Mhm. I guess we'll just have to throw this question because it's related. This is from Nikki Garcia. What other projects are you thinking of adding to your pipeline in the near future? If Julius can shed more light on the provinces that
Yeah,
you guys are looking at.
yeah, sure. So we've been looking at opportunities in the neighboring provinces: Laguna, Cavite,
Mhm.
Batangas, Bulacan, Pampanga. But we're just assessing the right opportunity, and
Mhm.
of course, we're also constantly looking at the other sectors where we could play in. Like data centers have always been, it's a popular segment to participate in. Like industrial and warehouses, logistics. So we constantly evaluate these opportunities and see if it's a fit for us.
That's right. I think that would be very interesting for the company because that would be other than your Aseana City project. I think venturing into other areas and really showing some success there could really help. I would like to think could help in unlocking the value of BMW moving forward. Now for the next question, sige, we'll take this. This is from Kelsey Sapitan. How's residential take up given the high interest rate environment?
No, I touched on it a bit. No, we've seen recovery in demand, particularly from the investor side
Mm,
of things. So, for the reason that I cited earlier, it's still attractive as an investment, given that if you add the rental yield plus the price appreciation or the expected price appreciation, you can still get over 20% the total
mm.
return. So, yeah.
I guess Jeff, the question for me is that in terms of breakdown, do you encounter more end users or are you starting to see a pickup in residential investors?
Ngayon, more on the residential investors.
Oh wow, okay, that's good to hear. And this next question is from Jonathan Martinez. With increasing office transactions in the countryside, is DMW looking to expand in the provincial areas? Again, as Julius mentioned earlier.
So probably if you
Uh,
could pick up on that, sir.
Yeah, sure. I mean, like we're constantly looking for opportunities as long as it makes sense. There
mhm,
has been a shift towards the countryside. Although if you take a look at it, the talent is still found here in Metro Manila.
mhm,
So our concentration is of course here. But like if there's a good opportunity and the fundamentals make sense. There's ample labor supply. Land values are accommodating. And from a yield perspective, it makes sense. Then we'll take it.
mhm. Piggybacking on Jonathan's question, Julius, your your office transactions, especially for Parqal or around that area, is primarily concentrated to. Can you give us more information on the profile of your tenants?
I can
Are they
probably
more?
take that, no? So, Jep, our bread and butter are the logistics, shipping, manning, and the traditional type, no? Altogether, these account for around 35% of our office occupancy, no? Um, I know that you'll probably go into this question, but POGOs only account for 5%, less than 5% of our our occupancy. No, the
Mhm.
BPO is somewhere around that, also around 5%.
I see. Wow, more of logistics. And
Yeah,
then
And then Jeff,
I guess one
just
last
to,
question.
sorry, Jeff, just to
Yes,
add
please,
on,
please. Sure.
a good thing about our tenancy profile also is that these are the type of industries that actually use office space. I know that there's been a resurgence of the hybrid work model, specifically in the BPO industry. But if you compare the usage and the occupancy of our buildings, it's all already actually close to pre-pandemic levels. Just because most of the industries that are using our buildings are actually their occupancy is close to 80 to 90% of their previous occupancies.
Mm. And then can you also provide us more information on the kind of term that logistics companies are inking with you? Is this like a 5-year deal, a 10-year deal,
It's mostly 5 years.
5 years with rental escalation?
Yes, rental escalation is still pretty normal. Yeah, ranging from about five
Ah,
to 10%, depending on the base rate that they're getting.
I see. Thanks for that, Buds.
Yep.
Okay, just very conscious of the time. We have 4 minutes left. I think we have a few more questions that we can field. Are there any more questions? Okay, from Miss China B. How will the reclamation projects, notably SM Prime's 360-hectare reclamation, affect asset values in Aseana City?
buds.
Yeah. So for us, the first of all, it's a long term project, but similar to how you would perceive maybe BGC to Makati. Did BGC decrease values in Makati? Actually, it didn't. Because of
Mm,
increase in critical mass, the agglomeration of talent, the increase in industries, the quality of developments within that area, property values actually increased. Did Ortigas decrease the value of Makati again in the 90s, or Eastwood to both Makati and Ortigas? Again, it didn't. I think it all goes down to how close you are to the center, and that's why I think there's a big interest in increasing um, the land in this area, just because of the infrastructure. I think Jeff mentioned it a while ago, the LRT Line 1 extension, the EX. The proximity of the entire Manila Bay area to the traditional CBT has more or less been reduced to about 20 to 30 minute drive. And I think as we move forward, as we add critical mass, and we add more uses to this area, I think we will see values slowly go up.
mm, yep.
Do you just want to add anything?
Thanks for that.
No, I think that's a perfect explanation. Like, I mean, just to point out, right? We're very close to Makati, but when Aseana City was completed, Makati and Fort Bonifacio prices continued to increase. So I, I
That's
think,
correct.
yeah.
I
So,
see.
Jeff,
Yep.
the way we'd like to term it is, these kinds of development, it's more supply, but it also leads to more demand, given that
Mhm.
this cluster solidifies the area's status as a go-to CBD. No, really. So, yeah.
Yeah. I'm very happy that you mentioned that because to be honest, we here in AB Capital Securities are still very wary and I guess very much concerned about the property sector here in the Philippines. Definitely a property like yours would attract more office locators. So we'd really be watching any new deals that you get to ink moving forward, especially with Parqal opening up. And to be honest, what I'm really excited about your area there in Aseana City is, of course, LRT and, of course, Parkal, which should attract more traffic. Now, before we close, may I field in one last question?
Sure.
Sure.
Okay. This question is from Renee Estomata. How many of your lease expiries for 2023 have already been renewed?
So maybe a better figure would be our weighted average lease expiry, which we also track. So our weighted average lease expiry, just because of the new supply that came in 2020, to end of 2021 because of 8912. So it got pushed back. So we signed a lot of new leases recently. So our weighted average lease expires is already more than 4 years. So more or less the average lease rates right now within the entire portfolio is about 4 years.
I see. Okay. Thank you very much for that, Buds. I guess that's all. That's all the time that we have for this afternoon. It's been pretty lengthy, but a good one, especially from my perspective. I hope our audience also enjoyed it, especially the virtual tour earlier. But definitely, we are very much appreciative of the time that you've given to us, Buds, Ben, Julius, and Jeff. We hope to hear from you again, maybe sometime later this year, especially when Parkal opens. Maybe we can do this again in Parkal. I think we
Absolutely.
can already do that in the flesh already. But yeah,
Yeah.
thank you very much again, gentlemen, for the time this afternoon, and good luck to us in 2023.
Thanks again,
Thank you,
Jeff.
Jeff. Thank you.
Thank you very much. Thank you very much. Okay, there you have it, everyone. Thank you very much once again for joining us this afternoon. Now, earnings calls, our earnings season is ramping up, especially for the first quarter 2023. I'm sure, especially for most of us, most of our investors, you've heard earnings reports from the banks, from Meralco, and over the next 2 to 3 weeks, our some of the companies that we closely track will also be reporting earnings, and because of this, please stay tuned to our next schedule for our next earnings calls, because the first quarter is definitely something to watch, especially after the reopening drive last year. So that being said, I hope you enjoyed your I hope you enjoyed the time that you spent with us this afternoon. I hope that was insightful, and we will see you again really soon. Thank you. Bye bye.